We're literally just now, actually, just before this as well, just chatting with another member of the SEC's crypto task force, and I'm not sure how much we can share about that right now, but what they were literally saying is they want to help to see how they can actually create the environment for another DeFi summer. So I think we're at this amazing point where we're like, wow, this is incredible. Like the SEC that we saw even just a year ago was totally different. It was like, totally how can we create a new DeFi crash? Right? Whereas now it's like, how do we create summer again?
This episode is brought to you by VeChain. VeChain is one of the top layer 1 enterprise blockchains in the crypto asset class, and they are getting adoption by many big brands and companies around the world who are building Web3 and decentralized application technologies. I've been a VET token holder for many years. In fact, I started investing in VeChain back in 2018. And some of the key features of the VeChain blockchain includes it's secure, affordable, scalable, fast, and sustainable. Some of the companies and brands working with VeChain include Givenchy, Walmart China, BMW, Boston Consulting Group, and many more. Most recently, they partnered with Dana White in the UFC, and Dana White even said recently that he purchased over $1 million of the VET token. And VeChain also recently launched staking, where you can stake the VET token and earn great rewards. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description.
Hey everybody, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and we are recording at Station 3 in New York's Financial District. And my guests are Dom and Phil Kwok, who are the co-founders of EasyA. Dom, Phil, great to see you both.
It's great to be here. Thanks for having us on.
Our last interview was virtual. It was at the beginning of this year. A lot has changed, so I'm really excited to catch up with you guys, learn about what's new with EasyA, and of course, get your thoughts on this crazy market. But what are you guys in town for? What are you in New York for?
We've got a couple of meetings. We were saying apologies for being late because we were just over at Trump Tower and the traffic getting down here was insane. Sure. We have a lot of meetings out here. So we have seen a lot of projects who are now coming and maturing and getting ready for basically prime time. And we're also building a lot out with EasyA Labs, which we recently started up. So we're here on the ground, boots on the ground in New York.
So are you guys helping crypto startups or different projects, helping them get started and things like that?
Yeah, I mean, you can think of EasyA really as being like, in some ways, an incubator, because we have three things basically that we do. Number one, it's the EasyA app, which is kind of like Duolingo, but for blockchain, we're like the onboarding layer.
Sure.
Then we host a lot of hackathons. So this weekend, we're going to be up at Harvard, hosting a big hackathon there. And then what we also do is we then help to get those startups access to funding. So over the past couple of years, we've given startups millions of dollars to help them build their projects out. And actually, we were saying that we'd been here before with one of our other startups called Axel. They raised from A16Z Crypto, so went through their startup school, raised a really neat pre-seed round as well recently. So they've just gone on mainnet, absolutely crushing it.
That's amazing. And it's awesome that you're helping these startups and new entrepreneurs and innovators, and your platform. Is it just like helping folks in the US, or is it also like international?
All over the world. Yeah. So obviously the US is probably our biggest market right now. The most companies and users of the EasyA app are, based in the US. But then also rapidly growing communities in Asia, Europe, and all over the world really. So EasyA is a super easy tool for anyone to use and learn about the world's best crypto projects on, given it's a mobile app. So anyone can download it. It's free. It's super easy, sort of like Duolingo, but for blockchain, as many people call it. And the community's just been growing all over the world. Over 1 million users now and tracking rapidly towards millions more. So. Yeah, definitely exciting times. And we spend a lot of time in the US, of course, because that's where, everything really sort of originated, so to speak. But yeah, definitely spending more and more time in Asia and Europe as well.
But is it like more easier now in the US with the favorable environment and legislation getting passed and things like that?
Yeah, definitely. I mean, people are really, taking crypto seriously now. The Fed, the SEC, it's sort of really, core part of their agenda. And so a lot of people that we see, especially at the younger stages, university students, people who are just getting into job markets, they are all paying attention to what's going on in the space with stable coins, with other areas of crypto as well. And of course, the whole Trump organization is really involved in the space too, and that's just put a massive spotlight on the space. So yeah, definitely becoming a proper, career path for many young people. And obviously, Phil and I do our best to also be role models in the space and show people what's possible in a very short amount of time.
We're literally just now, actually, just before this as well, just chatting with another member of the SEC's crypto task force, and I'm not sure how much we can share about that right now, but what they were literally saying is they want to help to see how they can actually create the environment for another DeFi summer. So I think we're at this amazing point where we're like, wow, this is incredible. Like the SEC that we saw even just a year ago was totally different.
Yeah.
It was like, how can we create a new DeFi crash? Right? Whereas now it's like, how do we create summer again?
Right. Yeah, they were trying to like kill it, the industry, right?
Yeah.
It was dystopian. It was doomsday. Now it's like bright sunny days and everybody can focus on building and innovating. A complete 180.
Yeah, 100%.
You mentioned something about helping younger folks to find their careers and their path in this industry. And you mentioned a Harvard hackathon. It just reminds me of Web2, where you had Mark Zuckerberg and the folks coming out with Facebook and many others. So tell us about this hackathon. And I saw Algorand is going to be participating as well.
Yeah, exactly. So that's this weekend. We're going to be hosting a big hackathon at Harvard, inviting the whole EasyA community from all over the US and globally. Typically, a lot of people fly in as well for these hackathons because they're a great place for people to meet other people who want to build in crypto. They're a great place for people to actually pitch their projects they're working on. So we have typically, 2 days of building and then a demo day right at the end. And that typically takes place at the end of day 2. And essentially, people will pitch their projects, get the chance to win funding, and then also prize money. And that's just a great opportunity for people to sort of get their start in the space. And so many projects that have come through EasyA, come through those hackathons, presented at demo days, have gone on to build amazing things. We've had unicorns come out of EasyA hackathons, AI companies that are completely revolutionizing the field, like Cognition AI, and another team that Phil mentioned earlier, Axel, which are working out of this space as well. So they're building really cool yield products now for different cryptos. So yeah, really long-lasting impact actually of these events that we host, and obviously through the work that we do at EasyA. And the goal is really to make sure those projects actually build long-lasting value for the underlying blockchains we work with, like Algorand, like the XRP ledger, like Stellar, and all of the other amazing blockchains.
So what are some of like prizes or amount of money folks can win in these hackathons?
That's a great question. It ranges.
Okay.
So on average, it's about $50,000 to $100,000.
Sure.
And that's totally equity free. So it's pretty incredible. Like I remember when I did my undergrad at Cambridge in the UK, and the annual prize, which like everybody wanted to go for, was £2,000. And I'm not that old. Like this wasn't, before, I don't know, we had all the inflation that we have. Obviously, it was before the last round of inflation, but it wasn't when £1 or $1 was like, worth $1 million. It was, maybe like adjusted for inflation, it would be like, $2,500 or $3,000 or so. But yeah,
Sure.
it's a lot of money. And
Yeah.
actually, we also host a big multi-chain hackathon twice a year now, together with Consensus. So that is at the conference Consensus with CoinDesk. And at our last one, we had over $1 million in prize money and follow-on funding.
That's amazing. So are the folks that you're working with, like Consensus, are they seeding some of these funds?
Great question. It's usually with the partners, actually the blockchains.
Okay.
Yeah.
Wow.
So what we do is we have like the biggest pool of talent, and then they want to tap into that. So because we had so many cool projects come out of previous hackathons, come out of the community, we're, in many ways you could think of us as like this onboarding layer into Web3. The smartest people pass through EasyA first, and then that's how we bring them in. And all of the top blockchains like Ripple, like Stellar, they want to tap into this, and that's how they can get the next big applications building on them.
I love it. And it's a way for them, like to your point, get more adoption of their chain.
Yeah.
And it's non-equity,
exactly.
right? There's no like equity taken or anything like that.
Exactly. I mean, later on, there's like all sorts of VCs in the networks.
Sure.
But yeah, at the beginning, it's really very much in keeping with the ethos of Web3, which is let's build this openly. We want projects to build open source as well so that other people can build on them later on. But it's absolutely fantastic. I mean, I wish something like this has existed when we were first getting started. I remember when I first got into crypto in 2013, it was literally me in my parents' basement, plugging in my computers and like being on different online forums. And YouTube, and a lot of people are actually even getting banned from YouTube for talking about crypto. It's like
Yeah.
just completely different times. Yeah.
Yeah. So what is it like looking back, and now we have TradFi, we have banks, stock exchanges, the biggest companies in the world getting involved with crypto in one way or the other, whether they're launching ETFs, tokenizing their own stablecoin. What does that, what does that mean for you guys?
I mean, I can kick it off with like where I started off, and Dom can chime in there. I think 2013 was such a different time. I think we all know that early 2010s, everybody was very, in some ways, like it was crypto anarchy, right? We had this like idea that we're gonna completely take over TradFi,
Yeah.
and we just absolutely were completely counter governments being involved. This was the antithesis of all of that. So even if you look at the original Bitcoin white paper, it was written and Bitcoin was developed against the backdrop of the financial crisis, right? The great financial crisis, all these big banks, too big to fail, the little guy who built them up, right? And Bitcoin was created as a reaction to that. And then you have projects like the XRP ledger, which come out as a better alternative to Bitcoin even. But that's what all this experimentation is about. And it's almost weird. I mean, there's this meme that is going around right now, which is like, people who are in crypto in like early 2010s versus people today, which is like, oh, we want BlackRock and all these different guys to come in. And it's like, what happened to us all?
What
right?
happened to down with the banks? Right?
Exactly, right? And it's like, now we want the banks to come in.
Yeah.
And it's interesting because I think there's different pockets that are still there. There's like, you got some of the OG Bitcoiners and some of like the really OG, like early crypto guys who are still feeling like, we don't want this. Like I'd say in some ways they're the Bitcoin purists. Sure. Then you've also got partners that we have like Ripple, who from the very beginning, guys like Chris Lawson, were like, actually, the way that we get adoption, like there's never really been a technical change which hasn't really built on what's happened before and actually sort of built its own future by welcoming them in, right? That's sort of like how you need to come into this future. And so I think that's the approach that Ripple took. Ethereum as well, interesting. They sort of have threaded the needle a little bit. They've had smart contracts, so DeFi, but also now they're welcoming a lot of institutional finance in. So I think what we're seeing right now is crypto has actually absorbed all of these different places. I think that there's different things for different people. I'm still fascinated by it. I haven't necessarily made my mind up as to which one is the right or wrong answer. I'm still pretty open-minded about it. But yeah, it's been fascinating to see how it is really, really different now to how it was.
But the ethos of it is supposed to be decentralized. So you can't stop an institution from buying Bitcoin or launching a product. Like, how would you do that? If you believe in the decentralized nature, anyone can access it. Like somebody in a country in Africa can buy a fraction, maybe just $10 of Bitcoin, but so can the billionaire. That's the nature of the beast, so to speak.
Yeah, exactly. I don't think so. I think it might even in some ways be counter to the idea of crypto that you can shut out these guys and not the others. The whole idea is it's censorship resistant.
Right.
I just think it's fascinating that the philosophy has definitely changed. I think the reason a lot of people are coming, I mean, let's also not ignore the fact that most people come into crypto because they want to speculate.
Yeah.
And so in some ways it's like, let's get the banks in because that means there's more money in the space. And that's a valid argument too. So yeah, I think jury's still out on which one's right. I think there's some areas where there's been a lot that's happened in crypto where I think there's some areas where the value that it adds is probably, I'm probably skeptical about. Even meme coins, I think, add value in some respect because at least they generate more attention.
Sure.
You have like the Trump coin and sort of like a legitimizing factor because like, wow, if Trump and the president actually has his own coin, then it's like a lot of eyeballs on it. Yeah. So even that I do see merit in, even though like I'm not necessarily the biggest investor in meme coins. Sure. I just think that it's interesting. It brings more eyeballs. So like, I'm not skeptical on that much, but I think there's some bits which are like, there's just a lot of hot air there's been in crypto.
Yeah. Dom, what do you think about the change and the growth?
Yeah, I mean, I think, the space has changed so much in the last couple of years, and even more so in the last year or two. I think we went from seeing, like Phil mentioned, the SEC that was very much anti-crypto to one that's very much embracing it. They want to actually hear what's happening at the ground level. We just spoke with the task force. Actually, we had a meeting with them earlier today, and they were really telling us, about how keen they are to hear from people who are actually building on the ground about, how they can actually make legislation that is favorable and also, really welcoming for these new companies who are launching. And obviously, we deal with so many of those companies, all the way from early stage startups to our, big partners like Ripple and Stellar and all of those. And we have a very good oversight of what's going on, both on that side, but then also with our backgrounds. Phil used to work in law at Sullivan & Cromwell. I used to work at Blackstone, biggest, PE fund in the world. And I think, back in those days, when I worked there in New York, they were very anti-crypto. But now, they've started actually, looking at the space in more detail. My colleagues who, previously never really understood anything about crypto, they want to learn more about it. They're asking me all the time, every time they see a podcast or something, they're like, how do we learn more? How do we get involved? And so I think we're going to see a big shift towards, institutional adoption, obviously, that we're already starting to see, pockets of, ETFs and tokenization of funds, etc.
Do you think part of it is, in addition to making money, because that's a big incentive for everybody, right? Whether you're institutional or retail. I came in because I wanted to make money off of Bitcoin, but then I stayed for the technology. I was like, okay, I see this as the next layer on top of the internet, and it's going to change the way we transact and do business. You think a lot of them are starting to recognize that, hey, this is not just speculation. Every market, every asset has a speculation layer, real estate, precious metals, whatever, the stock market. But wait, we need to build on this because this is going to disrupt our business model.
Yeah, definitely. I mean, I think, with JP Morgan was a great example. Jamie Dimon, their CEO, was very much anti-Bitcoin. And now they're starting to see, actually, we kind of need to embrace Bitcoin. We need to make sure that we can provide services to our clients, and both on the institutional but also private client side, that we can actually, show them these are the different suite of products we have. And we need to obviously cater to their desires to make money in the space and to actually invest and do things in crypto. So I think, it's been a seismic shift, obviously, in the space, and it's only going to continue. Once a big bank like JP Morgan starts making it clear that they want to actually embrace the space, everyone else obviously will have to follow. And we have many friends who, obviously work on Wall Street, and, a lot of these banks are now setting up crypto trading desks dedicated to crypto, crypto research as well, and really, just like devoting a ton of resources to the space because they know this is how the world's going to be operating in the future.
I mean, JP Morgan, Jamie Dimon, crypto's finalist boss, right? he was the guy at the head of the hill, right?
Yeah.
Saying, hey, this is all a scam. Don't talk to me about it. I remember he was saying would fire anybody who touched this thing. Now, complete 180.
Exactly, 100%.
It's amazing how things have changed. All right, we got to talk XRP because there's a lot. The XRP army wants me to ask you guys a ton of questions. So you guys are working closely with Ripple. Are you building with the XRP ledger as well?
Yeah, well, there's a lot that we will be able to share about that very soon. Our journey into the XRPL community was very interesting. I mean, we first started working together with Ripple about 2 years ago now in order to bring more builders into the XRP ledger ecosystem. It was one of the biggest criticisms at the time, and this is a pretty valid criticism, is that there weren't enough people building it on the XRP ledger. It was this fantastic piece of technology, but we haven't seen the same applications built on the XRPL that we've maybe seen in Ethereum, right? Yeah. Where you have these killer billion-dollar applications like Uniswap, like Aave, like Compound. On the XRP ledger, there hasn't necessarily been that DeFi renaissance or even explosion, right? Sort of not so much activity on the NFT space. There's amazing stuff that is going on with like XRP Cafe and those guys.
Sure.
But it hasn't necessarily seen that. And so one of the team over at Ripple, they actually came to one of the hackathons that we were hosting. Oh, wow. And he was like, we should do something together. And we got chatting, we came over to the office, and we got talking more and more and more. And then we hosted a hackathon together, huge success. And that's how we actually started working really, really closely together with the Ripple team.
Was it David Schwartz or someone else?
It was actually another person on the team. But then later on, first time we met David was actually in Tokyo. It was on the second floor, this pretty sort of small meetup. And together with the team, that was when we were chatting, we were like, I actually asked David, I was like, David, why do you think that there haven't been that many developers building on the XRP ledger, right? And he was like, well, you know what? Developers always want to feel like they are able to build anything that they want. And the way that the XRP ledger was designed was for a very, very specific use case for payments. And it doesn't allow you necessarily to build anything that you could possibly want. It's very different because it doesn't have smart contracts natively baked in.
Right.
And so David was like, yeah, you know what? Developers, they want to be able to just tinker and experiment, and people are very experimental with those sorts of things. And so that was like, oh, actually, well, the product market fit for blockchain really is in payments anyway. And basically taking what finance has traditionally done for hundreds and hundreds of years and bringing it onto the ledger. And so that was the start of our initial conversations together. I went up on stage with David Schwartz twice, basically in the following year.
Sure.
And we basically just started working together off the back of that. And so flash forward to today, we actually have mentioned EasyA Labs just earlier. We are going to start to build actually directly maybe I've said too much already, but there's stuff that's coming.
Sure, you can't give more details, guys? No, I understand. And maybe we'll have you back on when, that stuff is
100%.
live. Yeah.
There'll be this is like the culmination of many, many years of figuring out what does the ledger need? Sure. What does crypto need? What do users want? And also there's so much that I've learned from speaking with David, from speaking with other people on the Ripple team and the ecosystem, that we just see this, there's this massive opportunity. I mean, I think one of the key things that I'm constantly amazed at is just how early we really are. And it's people say it a lot. It's almost trite, right? It's like we're so early, but we really are. We speak, our younger brother, we were just saying, he just started in trading right here in New York. And there's so much that just happens that is so archaic that could be 10x, have 100x improvement in efficiency just by coming on chain. But it's we're literally just scratching the surface.
You think we're 1998 of the internet type, if you were to make
I feel earlier. I feel there's so much that even happens just literally with pen and paper, almost. Or he was showing us on his screen, there's this stuff, looks like it's from Windows XP almost. And it's crazy. It's not even Excel. It's these sheets which are, the just about digitized paper.
Sure. Yeah, I mean, and I tried to remind people of that. We're very early and there's further iteration that's needed. Maybe we're in the dial-up days and we haven't hit the broadband days, that type of thing.
Yeah, I mean, I think there's a good parallel actually between how, the internet first came about in, 2000s, for example, dot-com boom, and, crypto today. Because I think in the early days of the internet, not many people realized, all of the things you could do, number one, but also people didn't really trust it. And I think that's the same thing that we're seeing in crypto and blockchain now. People don't realize, the potential of the blockchain. Most people don't realize what the use cases are. And number two, people don't really realize, they don't have trust, basically. They don't realize, the beauty of the blockchain is everything is transparent. You can see exactly what's happening. People mostly see, these are just tokens that are being launched by people. And oftentimes, if you're not in the space, you associate crypto with scams. And I think that's something that people are going to have to learn, especially if they're not already in the space. We see so many people on Twitter and all over the place in person who are, really bought into the idea. Mm-hmm. But a lot of people still don't really grasp it if they're not, spending every day on Twitter, consuming the stuff and actually living and breathing it. So, I think, we're still very, very early. And once those two things are cracked, obviously we're working big time on point one, which is educating people about it, showing them the use cases, why they want to build. And then number two, once they are educated, then they start to realize, okay, this is a real piece of technology. It's not just a bunch of different coins and scams. And then, that's really when mass adoption will happen. And that's why we founded EasyA really. And that's why we see EasyA as being such a core bit of, crypto infrastructure, essentially.
Yeah. I think your point, definitely core. Because even on my end, I have a podcast and I still have to explain to people, either family members and friends, they're like, hey, how can I make money? I'm like, wait, slow down. First, I want you to read the Bitcoin white paper and then read the Ethereum white paper. You don't have to understand everything, but understand this is a technology first. Exactly. And here are the benefits. And yes, you can speculate. That's one component, but it's the internet that you use right now, you didn't necessarily have to go invest in Google stock, or you don't have to invest in it. You can use it. You can build with it. You could become an entrepreneur.
Exactly.
And that education part is so much needed.
You're really right. And I think part of the reason why maybe the line is so blurred there is because blockchain is inherently financial.
Yeah.
And I was chatting about this together with Rob Hardmeyer, Teal Fellow, one of the co-founders of Polkadot, actually. And we were just chatting before we went up on stage. And he was like, he views tokenization as being like one of the most important parts of what's going to lead this next bull market, number one. And number two, also just that the blockchain really is inherently financial. There's like loads of applications. I think a lot of blockchains as well, which have come and gone, which have tried to do stuff which doesn't really target maybe the financial side. There's a lot in gaming. I think gaming is interesting. And sort of, other sorts of aspects. There's social-fi, all these different like X-Fis, which have come and gone.
Yeah.
But ultimately what stayed and what's really got product market fit is DeFi, because blockchain solves the double spend problem.
Right.
And so to your point about why, people coming into the space are often like, well, how do I, maybe the way to use crypto is like, I just put money in and then get like more money back out. It's because like ultimately where the product market fit is on the blockchain is these financial use cases. So I think sometimes people, when they're coming just new to the space, don't necessarily know the difference between difference between like using a crypto application and like buying the coin, for example.
Yeah, and in public blockchains, what we've seen, you need a token with value to kind of grease the system for it to work, right? And we've seen that a lot of companies that went the permission private route and it didn't work, and now they're flipping to the public blockchains.
Yeah.
But for the public blockchains to work, you got to have a token with value.
Yeah, and that was a really interesting phase as well, when there was this sort of war between permissioned versus permissionless blockchains. And actually we see like we chat a lot with a lot of financial institutions. I'm actually consistently surprised at how many have internal permissioned ledgers.
Sure.
Where they are running a lot of this stuff. Obviously, they're not yet connected up to public blockchains.
Right.
But I do see it happening where actually because they have all this stuff in-house, that there's going to be some sort of connectivity which happens where they're going to realize actually we can tap into this huge pool of capital outside, or even expand our offerings to way beyond the people who we have in our current customer base by connecting those up. So I think that we're at this phase right now where we started off totally permissionless with these very public blockchains like Bitcoin, right? Soon after XRP Ledger came along, and then Ethereum. And then we were like, maybe there's more stuff to be done in permission blockchains. And that was, again, several years ago now. And then over the past couple of years, we've reached this point where everybody realizes actually permissionless is much better, much more open blockchains are better. But there's definitely still that use case where not every bank wants all their stuff to be totally public, right? And so I think we're at this stage where we've experimented with both models, or at least lots of different people have experience with these different models. And now it's about connecting the two together.
So essentially you see bridges being built for those permissioned to the permissionless public blockchains. To your point of banks, they want to use this, but internally it's fine. You can use your own blockchain, but if you want someone to trust what you're doing, you got to connect to some public blockchain. It's decentralized.
100%. And the beautiful thing about blockchain is not just the fact that it is like blockchain, right? It's like any one of us could run our own internal blockchain in-house, like within our own family members. That's not what makes it exciting.
Right.
It's not exciting when it's just siloed within a bank. The really cool thing is this idea of like money Legos, right? I think that's a really nice image to have in our minds.
Sure.
It's when this stuff is public, when it's permissionless, and permissionless in the sense that you don't need to ask for JP Morgan's permission to use whatever yield-bearing asset they have. Like you don't need to sign a contract with them. It's just there on chain. And you realize that actually maybe if you take this asset, which is generating like 6% yield, and you can, for example, lend that out to people, right? Or other people can borrow against it. You can use it as collateral. It's this money Lego, right? And it's like literally the Lego where you would build houses together, and you can build entire ecosystems around this sort of thing.
Sure.
That's what's exciting.
Yeah. Jumping back to the XRP ledger, one of the things you guys were mentioning about adoption and building and expanding the ledger. Do you feel though one of the roadblocks was the SEC lawsuit? Like, why would a developer or institution want to run the risk, right? Because many of them are risk averse. Their legal team probably said, hey, hold off, because we don't know what's happening here. But now Ripple has won. The case is done. It allows people to freely, not having to look over their shoulders, to go build.
Yeah, definitely. I mean, I think, obviously when any company has a lawsuit against it, there are obviously a lot of barriers to partnering with other companies and obviously to getting potential clients and customers, in which case, it just makes it a lot harder to achieve the overall goal. But now I think, obviously that the case is closed and it is finally over. It feels like it's been going, on forever now. But now that it's finally over, a lot of companies can now start to actually partner together with Ripple in a much more formal capacity. They can actually start to use the underlying technology, the XRP ledger. Developers are much more interested actually in building on it too. So that'll obviously help, spur activity on the ledger and ultimately lead to those, landmark projects being built that actually showcase the true power of the technology underlying. So I think definitely it's going to be a big tailwind for Ripple going forwards. And ultimately, I think, it's going to, be what actually, catalyzes the next stage of growth. And that's obviously one reason why we're really bullish as well.
Yeah, for sure. Recently, I saw you guys did an interview at the stock exchange. You gave an XRP price prediction of $1,000, I believe, by 2030. To your point of, this lawsuit being over, XRP has performed really well this bull market cycle. It's been one of the leading altcoins. Do you have a price prediction for this cycle that you can share? What are you guys thinking?
Not for this cycle in particular. I think, that's maybe something that, I guess we're still formulating.
Sure.
But, can release that eventually. But I think for us, one of the big things is, having that institutional adoption come into the space, both in terms of the technology, but then also in terms of the investment side. A lot of funds are looking now to actually deploy capital into different tokens. And one of the big drivers, obviously, of token price is not only retail excitement, which has obviously driven a lot of the excitement around XRP and around other tokens, but also on the institutional side. So making sure that funds can actually, number one, invest in tokens other than Bitcoin and Ethereum. And I think a lot of the legal teams inside those funds, a lot of those legal teams are now looking at ways that they can actually deploy capital into other tokens. And that's going to obviously create a huge inflow of new capital. So, getting the mandates updated internally, making sure that legal then approves investments in these different products is going to all be huge positive catalysts. Because right now, you turn on TV and you see on Bloomberg or CNBC, everyone's just talking about Bitcoin and Ethereum. Those are pretty much the only two tokens that anyone really talks about. Sometimes they'll talk about Solana, but I think what we're going to start to see is them actually talking about other tokens like XRP big time, because those are ones that, you just can't ignore. And obviously now the SEC lawsuit has been, removed essentially from all of their, screens. That's something they don't have to worry about, and they can actually now start to really talk about it, but then also put money behind those words. And I think that's going to be another massive tailwind for XRP and for other altcoins as well. I think as well, we're going to start to see developers take note of that. And obviously developer activity very closely follows token price as well.
Yes.
And so when the token starts to move up in a big way, developers also start to come and follow that. So token price is obviously a really important thing that I think, blockchains don't always want to necessarily admit they focus on, but ultimately they have to focus on it, because a token that's, at all-time lows is never going to obviously reflect well on the technology. People see that and they see a chart that's just basically crashed all the way down, like a lot of the new launches that a lot of new layer ones and their tokens have seen. It's literally just like a chart that just goes straight down and plateaus basically and tends towards zero. And that's obviously just not a good look for the blockchain, but also developers coming in. They don't want to, they don't want to see that. And I think, obviously you mentioned XRP has performed so well this year. It's one of the top performing coins this year. And that's obviously given rise to a lot of people building products around XRP, whether it's staking, for example, whether it's, all sorts of services. They're looking to actually capitalize on the momentum that's around XRP and that really strong community. And that's obviously a result of the token. And I think, that's only going to continue basically as the token continues to go upwards.
You mentioned some great points there, and I thought of network effects, like the nature of blockchains. You can see network effects in religion, in politics, in crowdsourcing, different movements. But to your point of developers are going to flock to chains that have network activity, value. And it's so funny how that is playing out in the digital world. And it's a new dynamic as it also relates to meme coins, which you were mentioning earlier. You're not necessarily an investor, but there's the network effects that things can catch on because of human nature. Like we find something funny and we all crowd around it. So it's just fascinating, this dynamic that's playing out.
It's true. And it's very much a flywheel. Price attracts attention. The attention attracts developers. Developers then build applications, which then attract more users.
Yes.
Which then has a lot of effects on the price. Maybe we don't have enough time to go into the precise dynamics, but I know people are interested in like how do developers affect price. There's so many different dynamics. There's obviously applications burn the tokens when they're used in transaction fees. They are also locked up in DeFi. That's why DeFi is so important as well. So there's a reduction in the amount of circulating supply. There are all sorts of things, and they bring new users in. Tons of different ways that adds value to the network. But I think, coming to your point, really when we look at an ecosystem, the value of an ecosystem is the people who are there in terms of users and in terms of developers. And when you mention meme coins, again, I think where I am today is I'm not really against meme coins.
Sure.
But there was a time when I thought actually meme coins, they're just like annoying and a bit of a waste of everybody's time.
Sure.
Like, why are we wasting our time with these silly things when the blockchain is meant for something that's a lot bigger? It's like, why did we get into this space in the first place? But I've realized that actually over time, they do attract new users. Literally, we were chatting with 2 new people who joined our team on the video side. They're not like, super, crypto native, but we were chatting with them. I was like, what interactions you had with blockchain, just out of interest. We grabbed lunch and we were just chatting about it. And they were actually like, oh, I just bought some meme coins because I wanted to play around. And like, they're not necessarily the most blockchain native people.
Sure.
But they bought some meme coins to have a bit of fun.
Yeah.
And I think what a lot of people who are really good at meme coins in terms of like building applications that people want to use on that side.
Sure.
What they realize that other people don't is that these are very social experiences.
Yeah.
That actually the blockchain has entertainment value even amongst those things. And so whereas a lot of people were looking at social fi before as being like, how do we bring Facebook on chain? It's almost like maybe that's not the right analog. The right thing is like actually meme coins, trading are inherently social. People posting up screenshots of like their wallets, right? And their wallet balances.
Yeah.
And that's the way that these things grow. And yes, it is sort of blowing the line again between like the financial side of the blockchain, the speculative side, all those different pieces. But at the end of the day, it's more eyeballs, more attention, and more people who are actually getting exposed to the blockchain, which is, I think, on balance, a net positive.
Well, it's funny because it's human nature. You and I, we could be at a coffee shop and you find a meme funny and you share it with me. I'm like, this dog is so stupid, right? Or whatever. Yeah. But now it becomes financialized. It's like this weird paradigm shift that's taking place.
Yeah, and it's kind of like, it's almost like a game. But it's actually, has some like investments that you have behind it. And I think whenever you have money involved, which is what makes crypto so exciting in many cases, it actually not only helps with retention, but also helps keep that attention, focused, right? It's like if you have a couple $100 or a couple $1,000 or maybe even more or less, you're just much more likely to pay attention to what's going on in the space and what's happening with that meme coin or that utility token that you've invested in. And so I think, anyone who's looking to get into the space, best way to do it is, just put a bit of money into a couple different tokens, and then you're always forced to actually look at what's going on. And you'll spend time on Twitter, you go down different rabbit holes, and you'll learn a lot along the way. Whereas if you don't have much invested or don't have anything invested, it's very hard to actually, keep an eye on what's happening. And it's a good way to force yourself to get bought into the space.
And it's funny because there's new possibilities that, maybe it's a bit weird for our generation, but future generations may not look at it as weird. Like everything tokenized in a way, right? The token economy, relationships. I don't know, right? Like love coins. I don't know.
Will they still be together in 20 years?
Right.
Or prediction markets.
You just think all the different things that could be tokenized and just taking human behavior, like what we do in our normal day lives in society, and it goes on chain. Not everything, but a lot of it.
I think it's really what a lot of this boils down to as well as truth. Like money and financializing a lot of these things bring out the truth. I think that a lot of people, there's this big meta right now, and what a lot of people are realizing is that, for example, like you bring up prediction markets. A lot of people have realized and are realizing today that the news that we see in the mainstream media doesn't have an incentive to actually give us correct news or the right news.
Yeah.
Right? Their incentive is to get us to watch for as long as possible,
Yeah.
so they can make as much money as possible selling ads.
Right.
So to string us along and just to get us to, watch till the end or come and, turn on TV again. Whereas in reality, the story might be very, very simple, right? I think we see it all the time with things like, it's often amazing. I mean, social media as well as in some ways also contributes to this in terms of like, people on YouTube might want to like string you along to the end when they could have just like given you the answer initially, right? And so all the dynamics are sort of a little bit messed up, right? Because the way that people are, this attention economy works is about retaining eyeballs.
Yes.
Whereas you go to something like a prediction market and you can see, this is what people really, really think. And we see it a lot with, for example, hoaxes. I think this week there was a big hoax about like how Donald Trump was dead or something like that. And it's like, obviously it's very interesting. Like if that were the case, then you want to click because you're like, what actually happened? But in reality, it could just be complete nonsense. And it's like the news and the entertainment is all mingled together, and that is what really benefits like people who make up that sort of news.
Sure.
Whereas in reality, like the financial side of it can just bring everything to the fore, and it's like, almost like sunlight is the best disinfectant. It's like, I don't know, finance or money. Just put your money where your mouth is, right? It's that sort of thing. And at the end of the day, those sorts of things really just like bring a lot of truth to light.
My hope is eventually, because I'm starting to see like AI-driven content, deep fakes and things like that, right? Yeah. That eventually blockchain and AI is used to verify content. So if you see a rumor, where's this from? And you can maybe click on a dialog box and it shows the history. This came from this profile. This is not a credible source, most likely fake, yada, yada,
Yeah. I think there's a lot of interesting stuff, and maybe this is going off topic a bit, but I personally think the idea of a truth bond is very interesting. It's like if, I don't know, CNN or whatever news outlet there is has skin in the game, that if what they're saying is not true and it turns out not to be true later on, they're going to give up that money. Then
that's interesting.
That's going to force them to be a lot more accurate with everything.
Sure. Yeah, they got to be accountable, right? That makes sense. And I wonder, like media and all these things can be disrupted by blockchain, and throwing AI into there, and it could really help the future of information.
100%. Maybe it's not as entertaining. You'll just see like you go on a prediction market and it's like yes or no.
Yeah.
And then you've got your fix of information. That's it.
Right.
That's all you need to know. Trump is alive.
Yeah, but the world will be in a better place. People wouldn't be gaslighted and fear mongering and all that, and we could probably get along a lot better.
Yeah.
Maybe it's like, in history, you see in civilization, we have these dips, and then because new technologies or new things come along and they expose us, and then collectively as a civilization, we have to learn and then grow from there. Like these things have happened over time, and the technology's here to help us do that, to learn and grow beyond these things.
Definitely.
Anyway, not to get off the crypto train here. So Genius Act passed, huge for stablecoins. Clarity Act coming up in the fall, potentially passing in the Senate. What do you think the Clarity Act would mean for the market and you guys as builders?
I think the key thing that I made a tweet about this actually even like a year or a year and a half ago, but I always said that legal clarity is one of the biggest factors in terms of driving economic activity and adoption. My background is in engineering and in law. And so I was an attorney. Well, I still technically am an attorney in New York. But one of the things that we were taught at law school and that we have seen true today is that when you have certainty in the law, when people can do business, when people can do things and they're not going to be called back on like retroactive laws, be punished retroactively, or for stuff that they didn't even know, some sort of like Kafkaesque sort of stuff, that's when things happen a lot more smoothly. And that literally has a very, very clear impact on the amount of economic value that can be created. So you look at a country like this compared to a country that is very much behind, let's say economically, often you can look at the legal system and you can see that things aren't clear. There's no effective enforcement of contracts, so people can't actually do business together. We were at the XRPL Apex conference in Singapore, and Ripple had invited a couple of speakers as well who were talking about the legal system in Brazil. And they said that apparently if like legal judgments or like claims, even if you win, take about like, it's debts. They take about 10 years to be enforced. Wow. Or like 20 years.
Yeah.
And that's insane, right? And so you can imagine that it's very, very hard to do business like that. Sure. And to tie things back to Genius Act, to Clarity, when we have clarity over, Clarity, that's why it's named like that. If we have clarity over which digital assets are securities, why they might not be securities, that can just mean that everybody can do a lot more together, right? It means that economic activity can absolutely explode. And so very, very, very bullish on just certainty. I think there's even, regardless of, what final form these things might take, what amendments might take, I think that just having clarity over those things, obviously a key part as well, is the fact that Howey and the Howey test has been very, very difficult, let's say. I mean, obviously sure. In some respects it's outdated, and previous, some people have said, it's actually fine, it's fit for purpose. But I think the broad consensus in the Web3 community is it's very difficult.
Yeah.
And I think it's very easy to see how it can be interpreted to say that some things are securities and also some things aren't. It's not like you can't just be a normal person and just realize that, okay, this is what I can do, this is what I can't do. It's like you're gonna get legal opinions from lawyers, and even then, not totally sure. But the value is that you just got a legal opinion.
Yeah.
So I think that those sorts of things are extremely important. Yeah. And I think that could usher in just so many more people, similar to how, what Dom was saying about SEC lawsuit against Ripple. Those sorts of things held back Ripple, right? Made it much more difficult for it to do business. Sure. Similar thing for what we're seeing with the Clarity Act. I think just it's going to open the floodgates to business being done on the blockchain.
Yeah, I mean, I think, institutions don't want to get into a space that they don't know it's going to be around, number one, because of regulations. And number two, they don't want to get into a space that, anything can change in the next couple of years, because those institutions have a long time horizon. Investments are looked at over years, 5 to 10 years. Funds are raised, to deploy capital over a while. And they don't want to, deploy capital in something that they don't think is going to be around. And that could just, one day become illegal, even though you can't, like we were saying, obviously get rid of the blockchains. You can make it a lot harder for people to invest and therefore obviously suppress price. I think as well, in terms of young people getting into the space, it'll be a big green stamp, from the SEC and from proper government bodies that this is a legitimate institution, legitimate, company, legitimate sector, and, you can actually build a career in the space, as opposed to before where it's like, maybe I'll go in for a little bit, maybe launch a token, then, disappear and, go do another project or something, or go get a real job. I think people start to realize, crypto is something where you can actually make a long-term career out of.
Yeah. I'm excited, man, because the setup is beautiful here with legislation, TradFi, and all these folks are coming in, and in more capital. I see maybe a big economic boom coming out of this industry, kind of like definitely. The internet, a lot of wealth created, 100%. A lot of jobs, and much more.
That's why it's called Web3.
Yeah.
Web2 is what we're in right now. Web3 is what's coming. Yeah.
So the hard question, and I don't know which one of you want to answer this, but what does Web3 look like in 2030, 5 years from now?
That's a really good question. I think people often say the 5-year bit is probably the hard bit, right? Because it's not so close that you know exactly what's going to happen, but it's not so far away that it could be wildly off into the future, and things have a ton of time. I think 5 years from now will be in 2030. That's actually pretty crazy. 2030. I actually remember when I was a kid, I was thinking even 2020 would be complete future.
Sure.
But yeah, I think in terms of where we'll be, I think one thing is for certain, which is that we're going to have way more of what currently happens in finance on chain. Exactly which pits, I will take a couple of bets, I say. I think people have already started to trust their banks less. Sure. I don't know a single person who likes their bank. And I think that if anybody could get away from their bank, they would. Yeah. So we have evolved into this system where banks previously were providing a service to us. most of us are actually hostages to our banks now. Like, we just have our money in there. When we try to take it out, they're like, no, what are you using that for? If we try to send it to other people, they're like, who are you using that? What are you doing? Like, what are you financing? It's like, no, I'm just trying to pay an invoice. Like, that's it. I think that we are really fundamentally getting a raw deal in many respects. And that's ultimately why banks are able to make so much money. Yeah. We've also seen with the collapse of Silicon Valley Bank and having to be rescued and all these, the regional banking crisis really recently, that money is actually not super safe in a bank, right? Fractional reserve banking. Sure. I think if I'm looking at one area that I think is going to really change and that I personally actually want to drive forwards, it's to help make this system a lot safer, right? Where actually you can, again, be in control of your own assets, right? And I think that comes down to, obviously the money in your bank account is easiest to think about. Just getting control over your own money again, right? Having that safe away from banks like lending it out irresponsibly, because at the end of the day, they are profit-driven institutions. And whenever you are extremely profit-driven, you're going to be forced to take more and more risk, right? You want to take your own risk with your own money. If you want to lend it out, you should just be lending it out and you should get the full APY on that. Right. But you're making that decision, you're in control. I think that if, we're talking about property rights as well, I think having property rights very clearly being enforced as well on the blockchain, your rights to your money, your rights to your property, all these sorts of things. So I fundamentally just think that within the next 5 years, it's not like super long. So I'm not going to say the stuff about maybe all sorts of democracy coming on chain. Sure. I think that's up there. Ultimately, that's why Web3 was created, to bring the principles of democracy, as Gavin Wood said, who coined the word, into the internet as we know it today. But I think that probably it's really going to start off with finance. I think banks are going to be given a run for their money in terms of when we have these competing products, which are just as good as having your, you might have your money in Chase, but you might equally just have it on chain, could be on the XRP ledger, and it's always there for you. You can have a look, and it's like the balance that you see there is the real balance. You can always take it out at any one time. I probably think that in 5 years, that is going to look very different. I think that we're going to have challenger banks, which are totally on the blockchain. Mm.
Yeah, it's going to be an interesting world. Dom, I don't know if you have any additional thoughts on that.
I think Phil covered it all pretty well. I think as well, the other big thing that we're going to start to see is tokenization of real estate. Sure. Not only tokenization, but then also a big focus on letting individual investors invest in real estate in a way that they couldn't previously. Yeah, sure. So tokenizing real estate, but then also allowing individuals to buy shares of, office buildings, for example. Yeah. And, getting dividends, from the rent payments, etc. So I think that's going to be a huge one, because there's so much real estate, it's not billions worth, it's literally trillions worth, all over the world, from New York to all the major cities, and allowing people to actually, on a retail level, invest in those projects and, make money. So I think that's another huge aspect that people aren't really factoring in yet. It's the tokenization of just, pretty much everything. But obviously real estate's a very natural one to be tokenized in the first place.
It's in many ways a blockchain super app. Yeah. Right? 5 years, we could have a blockchain super app where you don't it's your Web3 equivalent or blockchain equivalent of your bank. You get access to all of these different opportunities. At the end of the day as well, it is these money Legos again, right? So you've got the money in your account. You've got these different investment opportunities. You can package them up in different sorts of ways. You could even have your own stable coin, for example, which is collateralized maybe by these different things, by the yields that you get on your real estate, all these different types of things, all put together so that you can actually, for the first time, really be fully in control. You have different stable coins, you have different types of yields. And I think as well, crucially, I think one of the key things here is a lot of people have realized that the money that they put into their savings account and the US dollar they hold is just continuously deflating. It's going down in value. It's inflating, right? Yeah. But it's depreciating. Yeah. So I think that this is one of the biggest tailwinds for blockchain right now, is that people realize they want to get out of this system. And I think we're going to see a lot of people actually come into Web3 because of that.
Final item here, because there's a lot happening on X, a lot of crypto tribalism, Link Marines versus XRP army and this army. It's funny because it's what we've been talking about earlier with network effects, right? Everybody's kind of trying to grab more people to their network, more value. Isn't it funny? Again, human nature playing out on the blockchain.
Yeah, I mean, I think, it's one of the things that makes crypto fun. It's the sense of community. But I think as well, sometimes it can go a bit too far in either direction. I think, obviously you don't need to fight against each other because the space is still so nascent. Right. And, in the grand scheme of things, only 7% of the world actually own crypto today. And so there's so much more that you can actually spend your time getting as opposed to fighting with the existing small crowds. And so I think, from our perspective, we work with a bunch of different blockchains, the ones we're most personally bullish on as well. And ultimately, I think, for us, we just want to grow the space as opposed to fighting over the small sort of population that's currently in the space relative to what it could be.
Right.
It can be so much bigger. And I think that's really where people should be focused on, not just, trying to get people away from one token to the other. Because, there's always ways that you can spin arguments and, split up facts and look at different token prices over different horizons that make one look, better than the other. Yeah. And I think that's more of a futile thing as opposed to getting new capital into the space, new developers, new blood, new retail audience even into the whole crypto space. And that's, ultimately how the tide's going to rise, and it'll lift up all the boats along the way.
Yeah, well said. Dom, Phil, pleasure. Looking forward to the future updates around EasyA, and I'm looking forward to the XRP Ledger news. But thank you guys for taking the time to do this.
Yeah, no, thanks Tony. This was great fun.